This time last year at this conference, you predicted 40 to 80,000 Wall Street layoffs over the next 12 months. So looking at the numbers that we put together, it looks like pretty close to 40 at least when you look at just the big banks. Are more cuts ahead? Is there another leg down for jobs?
It was actually August of 2010 that we put out a report that said 40 to 80,000 Wall Street jobs would be lost over the next 18 months. And by 18 months, we will probably be just on the nose with 80,000 layoffs. So the sad reality is that the business environment has not improved over the last 3 months. It was very bad over the last 6 months. The trends are deteriorating, and so I don't have a lot of optimism for the fourth quarter. And what will happen is, if the banks continue to earn below their cost of capital, the only response that they can have is to dramatically right-size, rationalize costs, and that means downsizing their headcount dramatically. And in the second quarter alone, on a global basis, you saw over 100,000 jobs cut from the system. This is jobs announced in the system.
Plan.
And of course, Wall Street always expects a certain level of attrition, but there isn't attrition when people don't have another job to go to. So the hiring has come back dramatically. I think this is going to look. We could have been too optimistic in retrospect with that estimate.
Too optimistic?
We could have been. It's too soon to tell.
From what you're seeing now, do you think we could see even more substantial cuts on Wall Street?
Wall Street should not feel immune. Wall Street is actually the last bastion to actually right-size costs. The financial industry has been the last group to right-size costs, and so that means last group to really make dramatic headcount reductions. And so when they do, they'll probably be more severe because they'll be playing catch-up.
When we sat down this spring, you predicted 2 million government job losses in the next 2 years. Are you still in line with that? Do you still believe that's what we're going to see? Is it going to be worse?
Okay, to be specific, it was May of 2010. There would be 2 million layoffs over the next. I think it was 2 years, and we're so far 600,000 deep, and that continues. So the big issue was the states balancing their budgets or getting their balanced budgets submitted by June. Well, it's June 30th. Some of them didn't get it submitted till really the final numbers through till August, and mostly, so the vast majority included announced layoffs. The problem that you get into now is a lot of those budgets had overly optimistic revenue assumptions. So the revenue assumptions for many states, California being one, are coming in below expectations, and so they have to cut still further. So they can cut social services, they can cut state and local government employees, and many states are doing both.
So you still believe that it's going to be 2 million cuts, or do you think it could be worse? Has the action by the states and governors shown you that they're willing to make the changes necessary to not need to have that many cuts, or do you say, look, it still looks as bad for the states?
Let's get to 2 million, and I'll tell you again. But the sad reality is that so many governors made great moves in the last budget session to pare costs, to cut social programs. But there's always a divisive issue in terms of, do you cut social programs? Do you lay off workers? Do you raise taxes? I mean, there are a lot of contrasting opinions about what to do. The governors have had to do all of the above, and the issue is that the sad reality is that property prices have not improved. Tax receipts have not improved. As the economy nears a double dip, or even if it goes into a double dip, it makes all of the budget assumptions incorrect. So by having the math wrong on GDP, U.S. GDP estimates for the just not to get fiscal quarters and calendar quarters, for the second half of the calendar year come in decidedly below expectations. So many of the states had used those types of GDP, those types of projections. Those are coming in meaningfully lower. If 2012 looks meaningfully lower, all the math is wrong. So the math, you have this ripple effect of the math being wrong on so much, so then the budgets are wrong so deeply, you've got to go back to the drawing board, cut more. And 49 states, of course, have to balance their budgets, and you see this across the board. This is, I think, we're at the very early stages of very deep cuts.